Hi everyone, in this video we're going over Hawaii taxes. We're going to talk about Hawaii income tax, and then I'll mention some other taxes, and at the end I'll talk about what you need to do and post. All right, so when you pull up Google, search Hawaii State Tax Department. And the first link will be tax.hawaii.gov, and you're going to be heading over to the website. We're going to take a look at the state of Hawaii income tax form. And this tax form, you see, you just scroll down and it has basically the main taxes and tax forms. Most states have a bit of a smaller tax than Hawaii state taxes. Hawaii state taxes are fairly large in comparison to most state taxes. We'll look at the tax form here. So when you click this link, individual income tax forms, we'll click the Hawaii individual income tax forms. Now you can see there's a listing here of the forms, and you can see individual income tax return resident form. It's N11. Then they have non-resident and part year residents N13. If I remember correctly, N15, sorry. The N13, I believe part year and non-resident used to be a separate return, and like most states, they combined them onto the same, but I'm just going from memory. So you can see instructions in this column. You can click to e-file in this column and fillable forms in this column. And yes, that means that you can e-file your income tax form directly from the state website. Most states have this functionality now, even though some people are paying TurboTax $40 to do it for them, or someone at H&R Block $200, but remember, you would still have to fill out the forms. Some states are more user-friendly, like using a TurboTax. It asks you questions. Some states, you just enter the numbers into the forms. For DIY taxes, I typically recommend Free Tax USA because it's actually free for federal and then very affordable for state. So to see the forms, we can click either of these to see them. We're going to go into the N11. Now, essentially, they don't want you to fill out these forms. Hawaii is very particular about how you fill out the form, but we don't need to worry about that. We're looking at the calculation, which you can see here. I just want to make sure that I'm still recording because my picture went away. Okay. There it is. I'm going to try to open this in another page. Maybe we'll do the hand-writable one instead to see what that one looks like. And I just press Command and then click the link, and it opens in another tab. So there we go. This one we'll be able to see a little bit more clearly, and I guess I just don't show up on this form. So much like federal, it starts out with your information, and then as you go down here, one thing that is much different about the Hawaii tax form, which is that many states start with federal taxable income, and then they have adjustments to federal taxable income and adjustments from federal taxable income. Instead, Hawaii very much has a more complicated than many states, not as complicated as Massachusetts or California, but somewhere in between, kind of chasing California for complexity. So instead, we're going to start with adjusted gross income. So what happens between adjusted gross income and federal taxable income? Remember, there's basically the standard deduction versus itemized deductions. We used to have personal exemptions. Those went away for federal, but basically adjustments to everything is what we're going to account for here. So we start with federal adjusted gross income. And then any differences in wages. Essentially, we're looking at all of the income and deductions and looking, is there anything that needs to be added back? Other Hawaii additions to federal AGI. So some of these can be fairly complicated. If you have something like pension, or for some reason something that was excluded from federal, that would be included for state. Then down here, so see, then this says total additions. So this is a sum of all of these amounts that need to be added. Now, most people don't have any of these. Most people will just have their AGI here and then their AGI here. But if you do have additions, they'll be added in here. And then these are subtractions. So pensions that are not taxed by Hawaii, but taxed by federal. That's probably the most common adjustment. Social Security benefits are also a common one, as well as military pay. Hawaii essentially gives the first portion, $6,564, not taxed, random number, and then some other adjustments. We're not going to get too detailed. So essentially, we start with AGI. We have Hawaii additions based on income, and then subtractions based on income that wasn't included for Fed. And so that gets us to Hawaii's AGI down here on line 20. Then down here, we're going to essentially look at itemized deductions. So these are, you'll recognize these from the Schedule A, itemized deductions. We basically calculate our own itemized deductions for Hawaii. So it's very common for people to not qualify to itemize for Fed, but they will qualify to itemize for Hawaii, because you can see, check out the standard deduction for a single person, $2,200 versus $12,000. So it's going to be much easier for someone to qualify to itemize, especially under the taxes section. And then married is $4,400, head of household is this $3,000 number. So this is where you put your standard deduction. If that is the greater amount, this is where you'll put your itemized deductions, and then whichever one applies, you're going to take Hawaii AGI minus whichever is greater, just like for federal, standard deduction or itemized, whichever is greater. And that will bring us down here. Now, unlike federal, you still get an exemption, what's called a personal exemption. This was one of the big changes. So we didn't really cover personal exemption because it no longer applies at the federal level, but it used to be just over $4,000. And that's why, even though they raised that standard deduction for federal taxes, they actually eliminated the personal exemption. So that kind of made it deceivingly bigger, as if it had been raised so much, when in reality, they got rid of another common deduction. And unfortunately, it raised that comparison for itemized to standard. And so that's why it forced many of the middle class to no longer itemize. And also because of the limitations on the amount of real estate tax and any state tax deductions. Okay, so for Hawaii, we get $1,144 as a personal exemption. And what this means is that everyone gets that as a deduction. And if someone qualifies as a dependent, then you get to take their $1,144 personal exemption. Now, they still might need to file a tax return. Let's say they had a job and they earned a few $1,000s. They still might need to file a tax return, but they won't get to take a personal exemption because they're claimed by someone else. Okay, that's the whole concept of I get to take someone as a dependent, which that's why there were all those detailed rules about qualifying child or qualifying relative. Now, federally, that only applies to the various tax credits that are related to if someone's a dependent, and other deductions like medical expenses. Okay, so that brings us down to taxable income. And just like on the federal form, AGI, standard or itemized, personal exemption and dependency exemptions equals taxable income, but we don't have this one, personal exemptions, anymore on federal. So then we calculate tax just like on federal return. So basically this is another tax return, just very similar to federal. We are starting with the AGI number, but it's still very similar. So from here, you check how it was used, just like Hawaii, just like federal. There's the tax tables and the tax rate schedules. And then there's also that capital gain tax in Hawaii as well. So if a portion of that taxable income is taxed at capital gain rates, then that box will be selected. And however the tax is calculated, whether with tax table or tax rate, that will be selected as well. If the tax is from capital gains tax, they tell you to put that amount there, blah, blah. And so then these are all dealing with essentially credits, specific credits for Hawaii. And this is the total of refundable amounts. And this is just the last calculation here. This is the amount withheld from your W-2, 2018 payments made. If you applied tax from 2017, your refund, you chose not to take it and instead apply it to 2018, which most people never do. If you filed an extension and paid amount. And so that brings your total payments. This is the amount you owe in total. This is your total payments made. And then you'll either have an overpayment, right? Or you'll have an amount to be refunded to you. And here is where you'll enter your bank account information. It's just like federal. If you don't pay as you earn, like you're required to, then you may have an estimated tax penalty, or you don't pay in enough if you owe too much. Down here, they ask about a few things. Did you file Federal C? Did you file Federal E? Did you file Federal F? And they ask you for the Hawaii portion of that and your tax ID number, GET number. So lastly, that's the tax I'd like to go over quickly because you should be aware of it. So these are income taxes, but then Hawaii is kind of hefty on its other taxes too. So there's a lot of other taxes, things that come to mind just to give you a feel. There's a tax for if you drive on the roads. It's called the PUC tax. You have to apply for it. There's real estate taxes. But one of the primary taxes that's practically as big as income tax and very similar to it is GET tax. So GET tax is an excise tax. And if you scroll down here under publications, we can see this fast tax reference guide. And then we have outline of the Hawaii tax system. This is a bit more recent. So GET tax is essentially 4% everywhere in Hawaii, and it applies to businesses, but it affects so many people because it applies to any time. It's not like exclusive, a few types of businesses. It applies to all contractors, anyone who does contract work, which is more and more people these days. It applies to rental income. It applies on everything. A lot of states have a double taxation where they'll avoid taxing the same amount of money twice. Hawaii's excise tax does not consider that. It's also not a normal sales tax, and it can be quite difficult to understand because normally the way sales taxes work is when you pay for something, there's a sales tax. The tax is really on the buyer, and they pay the tax, and the business receiving the money, they have their sales and they have the amount that is taxed. It's never their money. It's always the state's money. Well, GET isn't like that. It's an excise tax, the state says, not a sales tax. It is a tax on the business for the privilege of doing business in Hawaii. And therefore, the state doesn't care if you pass the tax on or not. You are allowed to, but either way, all of the money is your money, and then the tax is calculated on that amount. Now, things do get a bit more complicated than that. I don't want to imply that it's that simple at all, but that's a business tax. And so, we're not going to go that, it's a very specific business tax, and it's not income tax. So we're not going to go super deep into that in this video and covering this topic. So what I want you to do is, for this assignment, is you're going to come to the Hawaii website. You're going to download the N11 here. Once you open it, you simply press a download. When you come up to the top, this bar will show, and you press the download button and save it as Hawaii State Tax Form N11. Save. Look at that folder for where it's saved to so you remember, and then attach it under the assignment for this assignment in LaLima assignments. The one other thing you're going to do is come over to the Fast Tax Guide,